Jesper Hansen and Jesper Høvel, CEO and CFO of OrderYOYO. You just released your Q2 trading update. Very impressive numbers. This is just a headline, and I will remind people that there will be more details in your half-year report, the 22nd of August. But should we dig a little bit into the numbers and the result and what is driving that?
Yeah, let's do that, Michael. There we are. Yeah, I mean, as Michael said, just a very high-level presentation of our Q2 results. On the 22nd of August, we will release our half-year results, the report, and we'll have a traditional web conference with Q&A sessions at that point in time. But we wanted to give you an update here. As you said, Michael, very strong performance. We are super happy both in terms of growth and profitability. We are working along the strategy of liberating independent restaurants, both through M&A and organically being market leader in Europe, and it works. We can see that in the second quarter of 23. So let me just hand over to Høvel, who will go through the numbers.
Thank you, Jesper. So let me give you a quick voiceover on our Q2 performance, and additionally also our updated guidance for 2023. Our June GMV increased by 29%, reaching 2.3 billion. Very strong performance, and we are still in a challenging market environment. So we are very happy with the growth performance here. Our annual recurring revenue, June 2023, increased by 47% year-over-year, reaching 246 million DKK. Very strong growth, and actually, again, as we said in our Q1 performance, the highest ever ARR in OrderYOYO history. So net revenue reached 116 million DKK versus 87 DKK pro forma revenue in first half of 22. This is an increase of 33% and also something we're very proud about. Finally, our EBITDA ended at 9 million. Profitability is important for us, and we will get back to that, I'm sure. This is an improvement of 15 million DKK, and this is, as mentioned, a very important milestone for OrderYOYO. So with this current performance, we also see the need of an update, raise guidance for 2023. So our full year outlook with a GMV that is maintained between 2.5 and 2.7 billion DKK. Our ARR we increased to December 2023 to 250 to 260 million DKK. Net revenue increased to between 220 and 235 million DKK. And finally, our EBITDA raised to between 15 and 20 million DKK. So underneath here, you will see our original 2023 guidance. So compared to that, you see that our current performance is actually developing quite impressively, and we are very happy with that. That was basically a high-level introduction to our first half results. And then over to you.
Yeah, but looking into the numbers, ARR growth of 47%, you know, you mentioned the economic climate, and I look at other software as a service companies, and this was the old growth numbers. They are well below that. So can you mention the things that are driving that in your company? It clearly shows some kind of a product market fit when you can outgrow. I also look at the food portals, and they are really not growing this fast. So maybe 2 or 3 key areas you can mention that why you're growing.
Yeah, no, I think quite right. It's 47% growth. We're super proud of that. So first of all, I think the product market fit is very strong, especially in this climate, as we've talked about before. So the takeaway restaurants do need our product, and we're able to sell it. Number one. Number two, our organic growth is high. We are taking market share both from other white label providers and from the portals these days. And number three, our inorganic, so our M&A strategy definitely works. So a lot of the growth is coming from integrating AppSmart and Kingfood and OrderYOYO into one platform, both realizing additional cost synergies, but on the revenue side, cross-selling, upselling, And actually, the ability to sell a better product to the same customers. So a lot of this growth is actually also driven from existing customers. So basically, it's on all three parameters that we're performing very well right now.
And then on the earnings side, clearly a much better EBITDA with 15 million and negative last year and this year. And actually looking at the top end of your guidance, you're getting very close to being what we call cash EBITDA positive, self-sustaining financial growth. Very, very important in this environment on the stock market. So is that a target to get there, or will you again maybe focus a little bit more on growth? So a little bit about which balances should we as investors expect?
Yeah. No, you're quite right. I mean, obviously we haven't guided for cash EBITDA before, and not doing it in this report either, but it is something that's very important for us. It is something that we focus on, and we will definitely increase and optimize the cash EBITDA margin. So it's not a target for us to just stay at zero cash EBITDA. We actually want to increase that. I think that gives us the muscle to do what we want to do, which is drive further product development, further M&A, and then basically through that drive growth. But we want to be cash EBITDA positive. Yes, absolutely. Perfect. And you're right, we're very close.
The M&A, and lastly, it's really clearly that the M&A strategy is working. You know, you merging and being the market leader in European markets. So as an outside investor, then maybe the most important thing, do you have a healthy pipeline of potential new mergers that can drive further on? Are you ready to take on new mergers? So as this is clearly a value creator for you.
Yeah. Yes and yes. We do have a healthy pipeline. We are looking at this all the time. Actually, this time, as I probably said before, but even more so now, it's very important to choose the right ones. Now, 18 months ago, nothing was really for sale. Now a lot is for sale. So we need to be very picky on what we choose, and we are. We have a very healthy pipeline along the two M&A strategies that we're following, market leaders where we are not present, and local participants in markets where we are present, so that we can take out costs. And we have a healthy pipeline. And yes, it is definitely something that drives both profitability and growth going forward.
Perfect. Thank you, Jesper and Jesper. And we will dig more into the results and the cash flow and everything when you report on the 22nd of August.
Yes, thank you.